Is Bitcoin forming a double top formation? It's something we've been anticipating since early August, so just about a month now, where we were to see a completion of this double top to form an M-like shape, and now price potentially giving out to potentially give us a measured move here. And in today's episode, we're going to be focusing also on the volume and the Bollinger Bands to talk more about this double top and what has to happen for it to confirm. And once it breaks down, where should we expect to potentially see a bottom form? Subscribe to the channel for more videos like this in the future. Like the video if you enjoy content like this going forward, and let's dive right into it. So the double top, really important pattern here. It is a pattern showcasing a lot of sell side pressure at a key resistance, just giving us an idea that sellers are simply too strong and weighing down consistently on price, as you see here in these lower highs and then even lower highs right over here in the FOMO wick, which is now a wick in fact and not candle bodies. So this 26k level is the key level to give way, and in fact we've been seeing lots of downside wicking, a little bit similar to before here back in mid-June. But we actually reversed from here after maybe 2 wicks, a couple of wicks. Here we're still fighting for a potential 4th wick right now with very little reaction to this 26k region. And in fact, we're potentially seeing Bitcoin flip this 26k level into a new resistance. And if that is the case, then we're going to start to distribute from here. And the measured move is going to be 22k for this double top, around 22k, which is actually the very bottom of this right shoulder. Because if we think of this as a right shoulder, this as a larger left shoulder, and then this as the head, we have a very classic textbook inverse head and shoulders here. And we know that the neckline is somewhere around here for that inverse head and shoulders. But a key support, a very key support, resides at around the bottom of this right shoulder, at around 22k. You can see that this is a resistance right over here as well. And then actually we upside wicked into this 22k resistance as well, forming a lower high and then inevitably crashing, just showing how much we're weighing down on price here. So 22k was a strong resistance before, now a potential strong support on a potential pullback once we get a confirmed breakdown from this double top. And we have to talk about the volume here, because we're not really seeing any striking or extreme volume. In fact, this blue moving average here, that denotes to us whether or not we're seeing below average volume or above average volume. And every time we focus on the above average volume, you'll notice that we get a significant reaction from the market. So an above average seller volume right over here gives us a downside wick, which gets bought up quite quickly. So lots of panic selling and capitulation here, but also bargain buying at a discount. Strong volume there. Here on this strong seller volume, once again, downside wick, capitulation, panic selling. And generally speaking, here as well, downside wicking, post crash, lots of reaction. And generally whenever we focus on these above average volume bars here accompanying some of these candles, you can see that there is quite a reaction there in terms of whether it's a relief rally or a reversal altogether. And this also giving us an insight into this strong candle getting propelled by this buy side volume that is just simply above average here as well on the dip. So it's all about really seeking out that buy side volume that's going to be above average. And you can see that this buy side volume here, for it to be above average, not much has to actually happen compared to this period, right? Because we're seeing such low volume over the past few months compared to this period, for instance, that it just takes less volume for that volume to be above average. And of course, it also generates a lesser effect, because if you just focus, for instance, on this seller volume, or at least buy volume, this buy side candle is much smaller than this one. And of course, the volume is much smaller as well, but because it's an above average buy side candle, or at least volume candle, that propels price into a reversal. So right over here, compression is a key term here, because if we get above average volume, that's going to be the key in terms of the next reversal, or even in this case, potentially just prolonging the trend. So sell side volume, a breakout above this average, moving average here on volume, a breakout here would give us further downside continuation, a breakout on seller volume. And that has to do with compression, not only in the volume, but also in the price action. If we just measure, for instance, the distance between the upper and lower Bollinger Band, and these Bollinger Bands give us a good insight into how compressed price is, you'll see that this is compression. We're seeing price compression, and compression is what precedes volatility. And the more we see compression also in the bands, but also in the volume, that's when we have to expect volatility going forward. And we can see here that actually before we were rejecting at the upper Bollinger Band resistance here, and these upper Bollinger Bands and lower Bollinger Bands, and even the midpoint of these Bollinger Bands, they can be used as dynamic supports and resistances. So you can see here the upper Bollinger Band acting as a resistance. Here you can actually see that the midpoint is now acting as a resistance, and a strong one at that, given how we've just seen a very strong buy side candle just turn very quickly into a red candlestick on the weekly time frame. And now we're seeing this lower Bollinger Band act as a support, but just notice how this lower Bollinger Band is going towards the downside. So it is a dynamic support, so it is changing with time. So you're actually seeing that this lower Bollinger Band is declining over time, representing lower and lower price levels. Right now it's representing around 24.5k, and this is going to continue to decline as time goes on, which is why this isn't going to be a very reliable support, because this support is just running away from price. So we often also sometimes see deviations beyond these Bollinger Bands. So for instance, this could be something that happens in the future, in which case we should see lower targets than what the Bollinger Band suggests. So this support isn't going to be a very reliable one, but the fact that we're compressing so much between these two bands, the upper and lower one, compared to, for instance, before, you can see how this compression is simply changing over time, and we're seeing more and more price compression as time goes on over time. And this compression is going to precede volatility. So a breakout on above average seller volume, that would probably confirm a loss of 26k as a support to validate this double top formation, and this lower Bollinger Band is probably going to continue to run away as a support, and we could actually see deviation below it. But actually deviation below the Bollinger Band is what actually precedes a reversal. So it's also worth noting that while Bollinger Bands are useful in preceding compression or giving us an idea in terms of compression, and volume being a very important psychological story to support that compression precedes volatility, but Bollinger Bands can be useful in just determining these reversals once we breach, for instance, this lower Bollinger Band. But one of the other things to talk about in this video, and of course subscribe to the channel if you're enjoying this video, like the video for more videos like this going forward, really important to talk about these CME gaps. We're flipping the CME gap into a new resistance. It was a support, was a resistance, and now a resistance once again. And these CME gaps tend to get filled quite often, and I talk about that in a previous video, so feel free to check that one out in the top right hand corner. But we were talking about this CME gap, and many of you also said in the comments, and I really appreciate the engagement in the comments, that this CME gap was filled on the weekly, right? Because we got a breakout beyond this region, this was a CME gap, and then it filled in the weeks afterwards. And that is correct. But what's also correct on the daily time frame, for instance, is that in filling that CME gap on the weekly time frame, we also had another CME gap emerge. So for instance here, this was the CME gap that emerged, we broke out and then filled this CME gap, but by reversing we created the same exact one on the daily time frame. So in some way we have to now ask the question whether or not we're getting this CME gap form as a range low to the range high, of this CME gap range in some way, because if you focus on this monthly time frame right over here, this was the only CME gap on the monthly time frame, just showing how important it is. Just one single monthly CME gap, and this is where we actually reject and potentially form a local top for the year. And at the same time, if we look to the daily time frame, very different time frames, that's true, but the persistence of this CME gap emerging, filling, and then emerging right away, that persistence is something really telling about price. And of course, to the downside, it's the only potential CME gap left. So when the monthly right over here was the only resistance in terms of a CME gap resistance, on the daily and generally any time frame really, this is the only CME gap that we know of. Despite being filled on the weekly time frame, it's still very much clear on the daily time frame because it re-emerged once again. So in terms of a potential range, in terms of CME gap ranges, we have a range high resistance, a range high CME gap resistance right over here, and a range low CME gap support region as well. So essentially, the closer we get to the CME gap after rejecting from this range high CME gap resistance, the closer we get to this CME gap right over here around the 20k region, the closer and closer we get to a bargain buying opportunity for Bitcoin for the long term. And there is a very unique indicator that suggests to us that we are in already bargain buying opportunity for Bitcoin, and that is the Pi cycle top moving average indicator. And you can check out my video on that in the top right hand corner, and I'll speak to you in that one. Speak to you soon.